capital started because we saw a gap in the market where we thought there's an opportunity to build a differentiated ecosystem leveraging corporations and VCs. We feel that corporations want to tap into the external innovation, but they are not structured to do that. And we have seen a lot of corporate venture capital arms getting kicked off and then going south over the years. So we are trying to solve that big problem for corporations. And we have been signing one corporation a month. And the second gap in the market is the VC access. VCs have a tremendous knowledge set in their minds because they meet a lot of startups, so they start getting very good at pattern recognition, etc. And startups want access to VCs, but VCs don't have time. They just don't have the bandwidth to meet so many startups. So we thought there's a way to democratize VC access and bring tens of startups together to ask VCs questions and get really into the minds of the VCs. What do they like, what do they not like, etc. So that's how the model got started, and I think over time the ecosystem that we have built, bringing in the top speakers and top startups, has really grown quite nice. Making sure that we always keep asking ourselves, hey, are we adding value to the corporations and to the startups as well? Because if we are not doing that, then what's the point? Second thing, it's not a challenge, but second thing we are going to start doing is create our own venture fund as well. And because we started getting inbound interest from people saying, hey, this is a very strong ecosystem building up, how do you create your own venture fund? On top of it, I want to invest into that. So we are actually in the process of doing some initial closes as we speak from some LPs. So we're going to start that process as well in the next few weeks. I think a key thing that makes a startup successful is if they have the answer to why now. Because a lot of startups have a good team, good product, and they go after big markets, but that's not enough. It's necessary but not sufficient. You have to have the right timing, right market timing. It's like coming up with a solution for mobile phone apps pre-iPhone days. Great idea, but BlackBerry was not ready to adopt it. So you have to have the right market timing, and startups have a small shelf life as well, typically 1 year, maybe 2 years at the most before they run out of funding before they have to raise the next round. So they have to show traction within that time frame. And if they are not able to show traction within that time frame, that means there is no product market fit today. There might be a product market fit 5 years from now, but not today. So they are maybe either too early or too late to the market. And that's really what differentiates a startup being successful versus not. A key advice to startups is always stay humble. Be the person who can help others, including your team, including your customers. Have empathy towards them. If you really care about your employees, your investors, your customers, the startup will grow.